Welcome to the Business of Family podcast, the podcast where we explore the stories, challenges, and opportunities of family businesses. I'm your host, Tammy Buss, and I'm the family business survivor and a family business advisor. In this episode, I'll be talking to Chris Delaney again. So stay tuned for this fascinating conversation. Welcome back, Chris.
Yeah, it's a pleasure to be back. Thank you.
And we're going to be talking about communication in the family circles. And we're also going to talk about building an advisory, multiple disciplinary advisory team. Say that 5 times. So we ended our last podcast just getting into multidisciplinary teams and how important that is for estate planning or planning for transition or succession of a business. And so let's dig into that a little more. I know in your book you have a whole chapter on setting up multidisciplinary. I don't know why that is such a hard word to say. Multidisciplinary teams.
It's harder to do, too.
Yeah, it is very hard to do. In fact, I don't remember when we went to FEA school, our Family Enterprise Advising School. Yeah. There was a whole course, a couple of days just on learning how to work together as teams, and it is very hard because I think each discipline, regardless of what area you're in, you are focused in that lane. So if you're a lawyer, you're focused in the law. If you're accounting, it's all about the money. Investing, it's about the returns. Insurance, it's, everybody has their own vision. I think what happens a lot of times is it confuses people, right? You get different approaches from different people, and one will say, well, that's a stupid idea. Why'd you do that? You need to do this. So you did a very good job in your book, but for the people who haven't read your book, who will read it after this podcast.
I
hope so. How did you go about setting that up for the one of the clients that you have in the book?
I believe that this profession that we're in is an evolving one, and it's evolving the right direction. It's growing. It's new, relatively speaking. I mean, lawyers have been around since people started making decisions. So, we're one of those original sins, I suppose. But family enterprise advisors or family business advisors that sort of intellectualize the process the way that people like yourself and myself do, that's relatively new. And so the idea was to try to show the constraints. So I try to approach it. I'm always trying to be empathetic. Having been a practicing lawyer and, working, most of my best friends are lawyers. When you go to law school, that's sort of a natural consequence. I kind of get the practical limitations and the professional limitations that they function on. And they're very busy people. For them to sit down and spend a lot of time on thinking about a process that may be very difficult for them to bill and recover, when that's what the partners want them to do.
Right,
and that's a limitation for them. And you rightly pointed out, accountants have their own limitations. It's often seasonal. We're speaking at the beginning of tax season here. So many of our accountant friends, tax accountant friends, we won't see until June, maybe July, at least here in Canada. And so part of the process, I think, is understanding so that the client understands what those constraints are, scheduling-wise. And that often requires somebody to run a bit of point. And so having an advisor, someone like yourself, and I do work in this space as well, who understands those limitations and can actually visualize how that will strategically fit in for the client, takes away that difficulty of, where do I start? They're going to start with the family business advisor. And I think, and in the book kind of highlights this, someone who is prepared to spend time, who is in one of these other allied professions, but is prepared to spend time thinking about those kinds of nuanced beginning points.
Right.
And
that really helps guide the other advisors, because in your previous podcast, we were talking about, here's the plan, here's the process, here's what you need to do, and here's why, as opposed to tell me why. What do you want out of this?
Yes.
And by the way, I don't think I mentioned the name of your book, which is The Naked Opus. We'll have to talk about how you got the title as well.
Oh, sure.
But I don't think I mentioned that. So it's The Naked Opus by Chris Delaney. If you understand what the family wants or the person wants for their estate or their transition, then you talk to your other advisors it puts everybody on the same page as opposed to going in different directions. And I think, as you mentioned, lawyers or accountants don't have the time to ask those soft questions. What are you thinking?
Right.
What do you really want? They're like, how can we save you money?
Right.
Right. And obviously saving money is a good thing. Having control is a good thing. But how do you combine them? Because you can't have your cake and eat it too, right?
Well, and I think the book tried to highlight that if you want to do that, you're going to have to think hard about that and how that will create a process that. So it's a real paradigm shift. I hate to use that word, but it's a real paradigm shift in how you're doing your planning. So, for example, a lot of clients will say, well, one of my friends has become ill and their time is short. And, that actually concerns me. So I'm thinking about my own mortality now. I need to go do a will. And so they go and they do a will and they run through a checklist and they end up with a will that is probably similar to the will you might have done.
A cookie cutter?
It's a cookie cutter will. And it's
how many kids? What do you got?
Divide by,
equal.
X.
You got anything special you want to hand off?
And what else should I know about that? Is there any dynamics in here? Really becomes secondary consideration. But people like yourself and myself, we think about those things because we know that that's the reason that wealth often is, whether it's business wealth or liquidated business wealth, doesn't often make it to the second and third generations intact. Because that foresight that could have been done if people had been paying attention to it as part of the value proposition. So one of the things in the book that I, starting with maybe a different advisor is one way to start. Not, I need to do a will, so I'm going to go talk to a lawyer. Yeah. Maybe if I own a family business, maybe I start with a family business consultant and say, okay, what would be a better or another way, maybe not even better, another way to think about my wealth. And so in the book, and I know other people in this space think the same way, values is a great way to begin. What are the things that we value? Because that informs every decision we make. It informs how we communicate.
Absolutely.
And ultimately, you can see what one values in a will. When someone passes away and you read the will, you can see what one values. And that's, a will is actually a very difficult spot, particularly when someone's passed away, to communicate your feelings. It's not the greatest spot in the world.
No. Again, the communication about earlier. We'll have to have you back again sometime to do on the difference between a personal will and a business will and why you have two, because I think that's really important. Too much for this topic, but I think that's very important because when I get called in, we don't start with, I might be called in because they need something, but generally we back it up and get the bigger picture. And again, when we're back to communication, it's not just the words. Words are a very small percentage of communication, right? It's the way, the tone of your voice and your body language. The body language, I think, is 55%.
Oh,
so,
absolutely.
you can see people, how they react when you're talking about stuff. And so you can dig in and help them sort of decide what they're trying to do and then how to communicate that out to, their family or get the values and are they aligned? Because I think that's the key is not just putting it in place saying, hey, divide by 4. And as we talked about in a previous podcast, what happens if there's a divorce?
Oh.
What happened? How are the shares going to be part of that equalization? Are they, if they're already a shareholder, because, we tend to bring our kids in as they're adults and maybe they become shareholders. Is it to stay down the bloodline? Is it to be divided? There's so many different elements when you either have a lot of wealth or you have a business.
Well, and the technical language of a will and the technical structures of a tax plan, these are, they're beautiful, they're elegant in the space where they function, but they have no body language. And so the recipients,
there's no eye roll.
No eye roll. There's no hand on the shoulder. And so one interprets that the way they're going to experience it. And so they're going to, if they're tired or fearful or something, they're going to interpret that structure from that perspective. And so I think what we're both saying is we need to spend more time at the front end articulating and visualizing the purpose of the structures. Let's say it's an estate freeze. The purpose of this estate freeze is this. Here's what we're hoping to achieve. And instead of it just being done and live with it, let's spend time communicating why we're doing it this way. How do you feel about that? How can we make this better for you and achieve our goals out of this as well? And that takes time. And that takes advisors who are willing to spend that time as well, and who have a proclivity and a natural empathy towards what the various people. Not every family member is going to be technically oriented. No. And you're going to have to communicate to them differently. And that may be frustrating sometimes, but that doesn't mean it's not important. And so, building the multidisciplinary advisory team is really, really tough because
it is.
Putting 5, it's like herding cats intellectually, right?
Well, then everybody has their little fiefdom, and it's very difficult. Now, having been around for a while, and you as well, you get to know a lot of different advisors, and they understand what you're trying to do. But one of the biggest issues at the beginning is in making sure someone doesn't think you're stepping on their toes or trying to steal their client, when in fact what you're trying to do is get the best result for their client.
Yes.
By looking at all sides. As you said, they don't have the time to sit down and ask those questions. They're more there to say, here's the plan and here's how we can do it, as opposed to, okay, let's take a step back and say, what is here? Because, and you can sort of agree with me on this or disagree, but if you're a lawyer and you want to keep control, you're going to do the control part. But that might not work for what you really want to happen with the assets or the shares, because the tax, it's going to impact the tax portion, or the tax portion is, here's what we're going to do to save you tax, but unfortunately you're going to lose all the control.
Right.
Right. So there's a fine line. It's never going to be perfect.
No, and we have to accept that. I mean, I think we do the best that we
What's
can.
The priority, right?
But a lot of times planning is, I haven't done very much and I'm hoping for the best. And and that's not good either. One of the seminal questions at the beginning of the book is to have clients really drill down and ask themselves, why do I plan? And I'm sure you see this. I haven't met too many people in my life and in my practice who want to do harm to their family, passing on the family business or passing on the wealth. They want to do good. But they don't often spend the time to think about what that actually means for them and for the people they're trying to do good for. And so they don't often connect those dots. They just, I want privacy. So, here's how the will is going to look. I don't want to pay probate tax. Here's how the structure around this is going to look. There's way more to it than that. And that's going to mean a different universe of advisors at the end of the day. People who are going to say, well, we're going to have to tease more out of this so that I properly understand. And that's not going to be for everybody.
No.
Not everyone enjoys that.
And like you said, this is fairly new in terms of bringing teams together to work on, a common goal. And, the reason, again, that I switched into doing this full time is a couple of my successions in the last probably 5 or 6 years were accidental in terms of they weren't ready. These were young people who passed away and, left a bit of a mess to their family and their family working in the business. And that's difficult because I do think that we tend to procrastinate a bit because we always want to do what we like to do, and having those tough conversations or making the decision when you have a child in the business and not in the business, how do you equalize? Moms, we're very nurturing by nature, and we want everybody to be, treated fairly and equally, maybe not fairly, equally. And, on the other hand, you're like, well, what is fair, and what is equal? And that becomes hard because then you get resentment. I'm sure you probably found this. Resentment with the child who's been working in the business, who has a job, who's paid a salary to do the job, feels that the business is theirs. And a child who works somewhere else who gets a salary, who still feels that they should have half of that asset. So again, that's where you have to bring not just your lawyer and accountant, but there's a lot of different disciplines that can come in to work with that family. Well,
and going back to the 3-circle model that we started off with, all of those are different domains, and clients business owner clients have to understand that, you mentioned that the moms are nurturing. Well, if that's what the kid was expecting, and all of a sudden something comes out of left field that doesn't look like mom at all, it looks like some other person made this decision, they're going to come to all kinds of incorrect conclusions about the reason for that and the projection on who they are as a person. And, and the problem is if it's done in an estate plan and someone passes away, and it sounds like, unfortunately, you've experienced this, the person who wants to go back and say, no, that's not what I meant, can't do that anymore.
Correct. And that's that cookie cutter sort of wills, right? And sometimes you need just to get a will in place because you've got nothing.
Absolutely.
You do need something in place, but I do think it takes a little more time and it gives direction. And just as an example, I had a family I worked with, just that case, a child in the business, a child not in the business. And it took us probably close to 4 years to really dig down and have everybody on the same page and understanding why the business was going, where it was going to go, what was the alternative, and, here's how it's going to lay out. And everybody is happy about that.
Yeah.
But at the beginning, they weren't. But it's the understanding and it's getting everybody's perspective and then working with the lawyers and the accountants and the family business advisor to lead those meetings just to get everybody on the same page. So, just for our listeners, this is not something you do in one meeting, one family meeting. This takes a bit of time to work through. And again, depending on how big your family is, to work through the issues. Because loudest voice always wins, as you said earlier. And I think this podcast or a previous podcast that, I got the loudest voice. Here's my idea and we're going to run with it. And it takes a while to get answers or to get other people's feelings because they're going to say what you think you want them to say, what they think you want to hear. Even
structuring a meeting is, how you're going to go around the room and have.
That's always the fun part. That's the beginning meeting. There's not a lot of tears in the first meeting. You're setting all the.
They come later.
They come later. Yeah, I always make sure there's Kleenex in a room.
But we're always watching at that time too, because we want to see how the dynamics are in the family. Like once they realize that our position in that room is one of trust, that they can trust us, then I often think we become furniture and then they begin to communicate and we can watch how they are communicating with one another.
Right.
And I don't think business families necessarily think about how they conduct their own meetings, how they share ideas back and forth across a table, and understanding that different hats have to be worn and bringing a little bit of structure. And I'm sure this has been your experience too. Business families, they're entrepreneurs. They don't, structure sounds like a burden.
Yeah, it is.
and this is a straitjacket I'm going to have to wear. It's a surrendering of power.
It is.
As well.
It is. It's very hard.
It's very hard. But once you realize, 4 years, that's gratifying to hear that because there was a family that realized this is important enough to us. We're going to spend some time on this and get it right, at least as right as we can.
As right as you can. And really, it's about making sure everybody's on the same page. And then that's easier to work with the lawyers and the accountants. And they're not saying, well, I don't know why you're doing this. And you go, well, here's why I'm doing this. Right. And fortunately, with this family, I was able to work with the lawyer and the accountant. So that made it much easier to get the answers very clear and why and what alternatives. So I think it's very important to not just talk to your lawyer or accountant, but to start with a family enterprise advisor or a consultant, a family business consultant, to start to, as you say, tease out that information. What is it that's really important? And doing it in a way that people are not intimidated, that we want to be comfortable and feel heard when they're saying their piece. And I know it's very difficult to do if you're the family member, because I can't even run my own family meetings. You really do need a third party to run those meetings. And because now you're not just running the meeting, you're not running the meeting, you're sitting there being a participant in the meeting and talking in a different way, as opposed to, hold on there a second, Chris, can you let your sister talk?
Right.
Where it's like, okay, I'm back to being the parent.
Mom and
dad. So it's very difficult. Sounds easy, but it's difficult.
Children never stop being their parents' children.
No, I know. That's one of the hardest things to do.
It is.
They're still your kids.
And like you said earlier, you love them, but you maybe don't like what you're hearing coming out of them right now during the course of a difficult topical discussion, and having that neutral third party in there to mediate the meeting and facilitate the outcomes of the meeting stay on the page is so critical. And so understanding the 3-circle model helps you deal with that, because, you know, that facilitator can say, what just percolated up through this conversation is really a business decision.
I like the idea of the 3 hats. I think I'm going to have 3 hats to bring to every meeting now. I love that idea. That's a great idea. Because I think it was one of my aha moments was understanding the 3-circle model for my own family business. Yeah. It was like that, oh, yeah. You know, even though Lori would say that a lot to me, that was just our thing. I didn't really look at it and go, yeah, it's a really useful tool. Yeah, let's put the family in there and see what the impact is. And, you know, everybody's looking from a different lens, and you know, their questions, their concerns, their information, their knowledge is all different, right? Well,
the simple little thing like declaring a year-end dividend, when you examine it, I mean, it makes sense after tax distribution of profit to the shareholders. This is a return, but how do people that are in different circles view that distribution? I mean, maybe they don't own shares, so it looks like money's being taken out that they didn't have access to, or you know, yet again, the privilege of being in the business and someone else chose to go another path. They feel like they're being punished, and that's not what's happening.
The vehicle, that's always a big one, right?
Yeah.
Someone gets a vehicle because they need it for their role in the business. That wasn't a family purchase. That was a business purchase. And understanding that and getting that clarity is like, oh yeah, okay, now I get it. Because I've used this example before. If you worked at 3M, we're siblings. I work in the business, I have a car, and you work at 3M and you get a car. Well, should I get a car because you get a car at 3M?
Right.
So if I'm working in the family business with a car, why should you get a car? You're not working in the family business.
Exactly.
That's a family, you know, so understanding what you get as being a family member versus what you get as being an employee in the business and what you get as an owner are 3 completely different areas. And once you get that, you're like, oh yeah, okay, that makes more sense. Now I'm not as upset.
And it's not just the kids. I've worked with, had meetings with the owners, sophisticated owners of the business, and they'll have their cars owned by the, you know, just to stay on the car theme, because I laughed inside when you said that. And they'll try to give away in their personal wills their vehicles that are owned by the
car.
company.
They're owned by the company.
What do you mean I can't do that? I own it.
No, it's an asset of the company. It's a living, breathing entity. You cannot take stuff out of it.
You're stealing.
It's not your bank account, although you feel like it is, right? That's a whole other topic. We can get into that. Anyway, I think we're out of time today. And I just wanted to let people know, where can they buy your book, Chris?
So you can go to the web. There's a digital version available at Amazon.ca. So it's the Naked Opus, Growing Your Family Wealth for the Long Term. You can get print copies from my webpage, which is www.familywealthpress.com. Or if you go to my LinkedIn page, there's a button there to click on that as well. But there's individual copies that are still available there. I would buy them there just because some of the copies that are on Amazon.ca that are print copies, I don't control the pricing on that. I don't know what's going on with that. Yeah. Buy them from me. They're cheaper.
No kidding. Same thing with us. I mean, you can buy them all over the place, but you know, if you want multiple copies, come to us. It's a lot cheaper. Anyway, thank you again for joining us. I love this discussion. We're going to definitely have to have you back again. So if you just joined into this episode, there is a previous episode that we talked to Chris about a few other things. So go take a look at that and listen to that episode. Anyway, again, thank you for joining us, and we'll see you another date soon.
You bet. Take care, Tammy.
Okay. Bye-bye.
I hope you enjoyed this episode. I am Brian Van Arnhem from Integrity IT Services. Until next time, keep it in the family.
If you like this episode, subscribe to the Business of Family podcast on your favorite listening platform. You can also find BlueRoots on Facebook, Instagram, and LinkedIn. On the next show, I'll be back with another amazing guest who will inspire you with their family business insights. Until then, take care and keep it in the family. This podcast is for informational purposes only and should not be considered legal, tax, investment, or insurance advice. Before acting on any advice, please contact your personal or company advisors.